Hi everyone, I hope all of you are doing well and you can see me and hear me. Just a very quick thumbs up or a quick comment if you can see me and hear me, and we will start the session. Okay, all right. Okay, so awesome. Hey, hi Alex, hi Parimal, hi Hitesh. Okay, hi everyone. So my audio video is fine, right? Everyone can see me? Okay, cool, brilliant, wonderful. So we'll just start in like another 10-20 seconds, right? And before we, okay, so people have started naming the stocks that, hey, what about Divi's Lab? What about Punjab National Bank? What about XYZ? So, folks, basically, what I will do is that I will try to give information on stocks that you have been meaning to ask me. So, I thought that I will organize a session and I will speak about stocks also. But before that, very quick and important point that I will take like around 10-15 minutes to walk you through 5 key topics that I have written on my jotted down on my phone, right? So these are like 5 quick topics or 5 quick basic points, right? So there are just 5 key points that I want to speak about very quickly in 10 minutes. This is very important, and therefore I will just talk about like conceptual level stuff in 10 minutes, 10-15 minutes, and then I will do a Q&A on stocks, right? So that's a simple agenda. It's mostly going to be centered around the stock market. And many a times when I speak about the stock market, people say that Akshat, you're not speaking about the crypto market. When I speak about the crypto market, people say that Akshat, you're not talking about the stock market. So I can just go one by one. So today we will talk about stock market, and subsequently at some stage we will talk about crypto market also. Just because I'm not talking about crypto market today does not mean that Akshat has left the crypto market and all that stuff. Okay. So please don't assume that. Okay. Cool. So 5 key points, very easy to understand language, right? So let me get the story started. First and foremost, we need to understand the current state of the market. So this is point number one, that if you actually study the market right now, then markets have fallen, or Nifty 50 has typically fallen by roughly 15% from its top 1.5, right? Which is a very big fall. Interestingly, okay. So interestingly, the problem is that this fall in Nifty started with Nifty. It's very easy to look at and say now that okay, Nifty has fallen by 15%, but mid and small cap stocks which do not form part of Nifty 50, they started falling 6-7 months ago only, right? So I mean, they have been falling for quite a while now, right? So that's part A. An important point to note from this particular piece of information is that when people say that hey, it is very difficult to predict the bottom and top of the market, this is the reason why. Because it is, you cannot, the entire market will not go down and the entire market will not come up. There will be parts of the market that will depict a bull slash bear characteristic, right? And therefore it is almost impossible to outline why the market is falling or rising, right? So this is the first key point. But overall sentiment of the market is negative. Nifty itself has fallen by roughly 15%, which is a big correction, so to say, not crash, correction. So there are different types of corrections that happen in the market. One is a major, minor, deep. So this will be constituted as a major correction. That is point. Okay, so that is a very important point that you need to understand. Now, if you within this fall, this 15% fall in Nifty, blue chip stocks have also fallen by 20 to 30%. Many good blue chip stocks have fallen by 20 to 30%. If you take a look at IPOs, so there is a video that I will launch tomorrow, right, where I will speak about some of the IPOs that were launched last year and what is their performance have been, and whether or not you should consider investing in those IPOs now or not. So these IPOs have lost value by roughly 40-50%, even 60%, which is very similar to like the 2008 fall. So please remember that. I'm smiling, but this is not a matter of a matter of smiling. So the overall broad sentiments where we stand today, from point number one, is that the sentiments are extremely negative, no doubt about that. This is the first key point that you need to remember. So in case you are seeing your portfolio in red, please do not get stressed out, because anything that you would have purchased in 2021 would be in red, and it's okay for it to be in red because the entire market is down. So please do not get stressed by that, right? It's the simple market cycle. Okay. This brings us to point number 2, that okay, hey, can the situation go down further from this point? We were roughly testing the 15,800 Nifty support level today. So can we further go down, right? So there was a very strong support at 15,800 level, and in some of my earlier videos also I've spoken about the fact that 15,500 is a very, very, very strong range, 15,500 to 15,800. Can the Nifty fall even below that? Technically, yes, anything is possible. And if this support is broken, then we are looking at 14,600. That's the support that we are looking at in terms of Nifty breakage. Should it happen? Should it not happen? Not sure, right? There is no guarantee per se. So that's the honest answer. Again, as I said, the important point is that if you have purchased anything, right, anything. So here is a very small story for all of you, that people who just recently entered the stock market from 2020 onwards. So towards the later half of 2020, people made a lot of returns, right? Super happy, right? People started pouring even more money in 2021. So anything that you have purchased from 2021 onwards, now it is sitting in red, right? That is what is happening. Please be okay with it. I want to say it again, that please do not panic. Please do not take some weird action in the market that, hey, I will not do SIP, I will sell everything, I will sell good stocks. Please do not do that. This is a very important critical phase for you as an investor, not to panic, right? So please remember that even if the situation gets worse, please do not panic, right? Your job is to stay put. Do not act just based on the news, right? Please do not worry about what is going to happen around the world. Stock markets, now this is something that I say over and over again, the stock markets are designed to go up in the long term. If you do not believe in this hypothesis, then you should not be investing in the equity market. Now, many of you give counter examples that, Akshat, that, in Japan, the stock markets fell and they have fallen forever, so to say, right? So from that perspective, similar situation might happen in the Indian stock market also. Very good question. That requires a very elaborate answer. So I'll make a separate video on that topic, right? But Japanese situation was an economic driven situation or an economy driven situation. It had nothing to do with the design of the stock market. In majority of the other parts of the world, including India, US, etc., the stock market is designed to go up. A great parallel example is that, for example, when you go play in the casino, we inherently know that, hey, you know what, the house is going to win. When you and I do not make money by going and playing in casino. Yes, every once in a while we might, but it's the house that wins. That's the design of the casino, how it operates. Same is the design of the stock market, the way it operates, that it has to go up in the stock market. If there is no promise of return, if the situation that is currently is there, maybe right now I'm giving like so much information, trying to keep everyone calm, I cannot do it, right, beyond a point. So you would also lose faith. You would pull out your money, right, if this situation persists for another, let's say 2-3 years. Then you will move away to some asset class and you will never ever come back to the stock market. So you have to work with the assumption that the stock markets will go up in the long term, right? So this is point number 2. Point number 1 was state of the stock market, bad situation right now. Point number 2, the stock market can further go down. So please be mentally prepared for it. Ideally, it should not, right? There seems to be no reason per se why it should be going down. All majority of the things have been factored. So this is point number 2. Now comes good news. Point number 3 is, if you study, and this was like one of the key things that I was also studying from the stock market, that if you just quickly study the recent history of the bull run versus bear run, the bull runs recently in the last 2 to 3 decades have been going longer, right? So there have been longer bull runs and shorter bear runs. And there is a reason why that is happening. The reason is that because of the excess printing of money, this is something that I've covered on my channel, that due to excess printing of money, the excess liquidity needs to get absorbed in the market, right? And that leads to asset appreciation, right? Asset class appreciation. So everything goes up in relative terms. Many a times people say that, Akshat, you know what? This situation, what we are currently witnessing, it was bound to happen because stocks were inflated. So they are just getting deflated now. They are losing valuations. Yes, you are right that stocks were inflated, but why did that inflation in stocks happen? It happened simply because of excess printing of money. even if, and you would not know till what point this excess printing of money or excess liquidity will exist in the market. We are not central banks. We do not know at what rate this excess liquidity will be withdrawn. So there is no point in second guessing it, right? So please remember that, right? And therefore you should not be timing the market. And also in a high inflationary environment, or in an environment where excess quantitative easing or excess money printing has happened, everything will go up, right? So there is no point in sitting on the sidelines in cash, because cash loses value at the fastest rate, right? At least in stock, at least it gave a run up and then it fall. But the cash just depreciates for sure. That's a given fact. So please understand that simple point. There is no point in second guessing it. Okay, so this is point number 3. Please remember this. And here, part 1 of point number 3 was that some positive things. Number 1, the history of the bull run, or the recent history of the bull run, if you study, it is very clear that the bull runs are getting longer and bear runs are getting shorter. This is very, very good news. Number 2, the world cannot afford to stop growing. This is something that I keep on saying on my videos, that why is the growth happening in the world? Because of a wide range of reasons. But one of the reasons is that the debt is at an all-time high. So if the debt is at an all-time high, then the world has taken so much debt. Why has it taken debt? In order to grow. So it can't stop the growth. And as long as world grows, what would that mean? It means that businesses are growing. If businesses are growing, then the stock price will have to grow, and those businesses need to flourish in order for that high debt situation for the world to persist, right? So that's the simple point. Because you might have heard the argument that many people say that, hey, the productivity will go up, and that will eat into the excess debt, and the debt will come down because the productivity will go up. But whose productivity? The productivity of the business. So this is a simple economic argument, right, that you need to remember, right? Third and final point, and very, very hopeful point, is that if you actually study the range of the stock market right now, the highest point of Nifty 50 has been 18,600-ish, right, approximately, which we made few months back. Now the Nifty is around 15,800, right? So almost it has lost 16-17%, right? So there is an upside of around 18-19% from this point. Now, why am I picking that 18,600 level? Because that level has already been attained by Nifty, right? And prices tend to be sticky. So let me give you a counter example. For example, tell me, like, almost 9 out of 10 products that you will go and purchase, or go and eat, or go and spend your money on, tell me honestly, right, do the prices go down for anything, right? The prices generally do not go down for things, right? So please remember that prices, in economic terms, it is called as price stickiness. That once you have, or the world has decided that, hey, this is what the price of a certain asset is. For example, if an apple can cost 150 rupees, then in the meanwhile, it can come down to like 80, 70, 60 also, but very quickly it will scale up to 150 rupees also, right? So the point is, this concept is called as price stickiness. And since the Nifty has hit that 18,600 mark, this mark established, people believe in this mark, and at some stage, this mark is again going to get hit, and that gives you a run up of 18-19%, right? So, alrighty, okay. So let me cover 2 final points, and then I will start taking questions. 4th point, that after a dark night, the sun comes up. Okay, this is very, very important. A lot of you are panicking. I get a lot of panicky messages that, you know what, Akshat, this thing happened, that thing happened, war is happening, everything is going to go bad. Now, here is like interesting commentary, and tell me in the comment box which investor said this, that, hey, if you buy the dip on a war, then 2 things can happen. One is that you are right about the war and the war stops. So in that situation, you make money. Or if you're wrong about the war and the war escalates, then what will happen, right? It will lead to like World War III, right? And anyways, everything will go to dust, right? So what will you do with the money, right? So in either of these situations, buying the dip during a war time makes a lot of sense. Okay. Now I can see a lot of comments around HUL. So let me cover the final point, right? That after a dark night, the sun comes up. So you need to believe in that. The dark night is happening right now simply because of the fact that this war situation is there, high inflation situation is there, etc., etc. So what is it that you should be doing, right? So now you will say that, Akshat, you are painting like a rosy picture, but it's not as if that everything will come up after this, once the stock market goes to normal. And I agree, right? And there are 3 types of businesses that I see will not come back up. right? So let me outline it. This is the most important part of this chart. The first type of business that is unlikely to come up is pointless sectors, right? So pointless or sunset sectors, right? So there are two types of sectors in the economy. One is called as sunrise sector and one is called as sunset sector. Sunrise sector will be something which the world is betting on, right? So I will not name specific sector. For example, banking, a lot of evolution is going to happen going forward, DeFi, etc., etc. So that's a sunrise sector. Certain sectors we know, for example, conventional automobiles, right? So conventional automobiles, we know for a fact that they are going to get replaced by EVs, right? Now there are certain industries or certain sub-segments, probably OEMs, right, which are very big in this space, which are already struggling, and they might struggle more when this EV industry or this EV narrative picks more steam. So I will avoid these type of sectors which are sunset sectors. Please avoid that also. There is no point in getting there. Number two, please avoid stocks where profit clarity is not there. Now I will use I will not name the stock, right? You guys are smart enough to name it. So a lot of companies were launched last year, right? They did their IPO, and some of these IPOs are trading at 60-70% loss. And if you read the recent results of these IPOs, of these previously launched IPO, for example, if you read the results of Paytm, Nika, etc., etc., you will see that some of these are not profit making at all as of now. In fact, their losses have widened, and the story is not clear how they are going to make profits ahead. So just because they are available at, like, 60%, 70% discount from the top, please don't go and buy them. That is what my advice to you would be. Please don't do that. You will that would not turn out well, right? Third and finally, please do not buy companies that do not have any moat. So this brings us to the story of Hindustan Unilever. So what is the situation with Hindustan Unilever? Why is it falling? So a lot of reasons. One is the inflationary concern, right? So inflationary concern was already there even 6 months from now, 6 months ago, and therefore all FMCG. So first and foremost, it's not just Hindustan Unilever, it is Asian Paints also, it is Dabur also that is falling, it is Nestle also that is falling, right? So that is point one, that all FMCG stocks are falling. Why? Because of high inflation issue. They have been falling for the last 6 months. This is related point. But all these companies, be it Nestle, be it Hindustan Unilever, they have moat. Moat means that they have some kind of competitive advantage. Now, what is that competitive advantage? You have already seen it playing out. A few months ago, HUL, Asian Paints, they all decided that we are going to increase the prices of our product. Yes, despite that, their stock price fell, right? But you cannot take away from the position that, hey, these companies have very strong moat because they have the ability to price things, right? So since these companies have a very strong brand, the products that they are selling are everyday products, the product demand is not going to go down, right? Temporarily, yes, but in the long term, no. Number three, they are monopoly stocks. For example, Nestle has a monopoly in a subset of FMCG market. Similarly, HUL has a monopoly in a subset of FMCG market. So all these are tried and tested stocks. These companies have the pricing power and they will do price increases again. But yes, doing this price increase will take time, and it might take time for these stocks to recover. But these are well-moated companies. There is no problem with the stock per se or the fundamentals of the company per se. In certain situations, what type of companies will go under after this crash? Again, please remember the simple framework that companies which do not have any moat, right? For example, a lot of small local FMCG shops are going to get shut. Why? Because something like HUL, Nestle, Dabur, they are going to do what? They are going to squeeze the suppliers. They are going to squeeze the entire supply chain. Why? Because of cost constraints. They want to maximize their profitability now. They will increase the prices. They will do all these things. All these things are already written. They have already done one round of it, right? So please do not worry about it. So final point before I start the Q&A. So the final point is that what are 2-3 things that you must remember? One, please be very considerate as to what type of stocks you are buying. Number two, as I always keep on saying, that please be diversified. It is important to be diversified. I get some messages that, hey, I've invested like 90% of my entire portfolio money in Ujjivan Small Finance, or I have purchased like something like Paytm because it was getting very inexpensive. So out of, like, if I have invested 1 lakh, my total portfolio size 50,000 is invested in Paytm. So this is poor asset allocation. There is no reason. For example, if you have 20 stocks, it's completely okay to lose money on 10 stocks. The 10 stocks from which you are making money, that will offset all the losses if your portfolio allocation is right. So please work on portfolio allocation. Number two, please pick companies that are going to come up. Please pick companies where the business fundamentals are sensible. And final point, that please do not try to time the market. No one is able to do it. Read anyone's commentary. You will not be able to time the market. You can just pick good, sensible things, right, and invest them even when they are falling. Please do not panic sell. Okay, this is the most important point. Do not stop your SIPs. Do not panic sell. Keep investing. If you have money now, do invest, right? Because the valuations for good stocks have definitely come down. So we are definitely not in that overinflated territory, and all this will go up once the sentiments improve in the stock market. So this is a quick pitch, right, about the entire things that are happening. Now I will start taking some questions and try to clear as many doubts as I possibly can. So over to you guys. Right? Okay, so I will, impossible for me to keep a track of questions, guys. So what I will do is that I will try to take it from, can we expect crypto fall also? See, Sarath, crypto has already fallen quite a lot. Crypto, if you see fundamental value in crypto, you can take some positions, no doubt about that. Crypto works very similar to tech stocks. Lot of times people compare like Bitcoin to gold, XYZ to PQR. But bottom line is that crypto is nothing but tech stocks, and their performance is closely mimicking tech stocks. So if tech stocks go up, cryptos go up. If tech stocks come down, cryptos come down, right? So unfortunately, right now the tech stocks are down. Can it fall down? Maybe, I don't know, right, for sure. But yeah, I mean, there is nothing fundamentally off either in good tech stocks or either in good cryptos. Again, qualifying the word good cryptos, right? Okay. Second question, India Bulls Housing Finance, guys. Okay, so again, I will just simply request you to go and watch my video on India Bulls Housing Finance. I categorically said at least 3 times on that 12-minute video that, hey, I'm not going to invest more than 10% of my money on India Bulls Housing Finance. For example, if I have to invest 100 rupees in India Bulls Housing Finance, then I would not take more than 10 rupees position on it. I just took 10 rupee position on it. That is in red right now, unfortunately. Why did I take it? Because as I showed you that if you actually check the financials, India Bulls Housing Finance debt is being deliberately brought down, and at some stage it will give a swing. So it was a swing trade. Now, unfortunately, the entire market went down. So India Bulls Housing Finance is a high debt company still, despite reducing its debt. Therefore, it has come down. You should only worry about this situation if you have spent like insane amount of money is tied into India Bulls Housing Finance. And if that is not the case, you should not worry. Should you be taking fresh positions on India Bulls Housing Finance? No. Why? Because there are so many better stocks available now because the market itself is running on a discount, right? Okay, so Sagar asks, why is no one buying BPCL? Even the Brent crude cost is so high. It is so... No, so Sagar, this is a temporary shock in the economy due to which the oil prices have gone up. It has not changed the fundamentals of the company. This does not mean that BPCL is going to give you massive profits after 2 quarters or 3 quarters. This is a temporary situation that has happened. That's it, right? So please do not get super pumped up that, hey, oil price is very high, let me buy oil stocks. You are just gambling, right? You do not know when a specific announcement would be made and you would suffer then, right? So please don't buy these cyclical stocks. Okay, that's my perspective, but yeah, I mean, everyone would do that, right? Thoughts on Tata Coffee holding since 221 rupees with more than a lakh of notional loss. So see, overall Tata Group companies are good. Now their valuations are also getting better. I think you should hold it, right? So I mean, you should not be selling it. It's completely okay to hold something like Tata Coffee, Tata Consumer Goods as well. Okay. Peter Lynch said that this is a game of gut and not the brain. Is the power play finally over? So Karthik, basically it's just I agree with Peter Lynch, and I think he gives like some very relatable quotes, right? So it's like so easy to understand him. You should definitely read more about Peter Lynch, all of you. So basically it's a game of common sense, right? That's what I'm simply getting at. For example, if you consider certain industries, for example, a lot of people are casting aspersions on let's say asset management companies, that something like HDFC AMC will completely get blown away. The entire AMC industry is highly competitive. Okay, if entire AMC industry is highly competitive, then please give me a sense, or please give me, like, comment below and tell me that why is it that Mr. Nitin Kamath, or why is it that Sachin Bansal from Navi, etc., they are entering in the EMC industry, right? It is competitive. Why? Because there is excess profit margin. Look at the profit margins of companies like HDFC, AMC, and any AMC company. It is crazy, right? It is very, very high. There is temporary surge in competition. There is temporary taking away of market share, this, that. And of course, like from an absolute market share point of view, HDFC, AMC will lose. But all the AMC companies are going to be super profitable. They don't require a lot of money to run, right? So there is no systematic problem here at play. And there are some very good industries where you can take some positions. Okay, want to accumulate one of these stocks, HEL, Infi, TCS, please suggest. So I would, if I were to purchase one of these, again, not a stock buying or selling recommendation, I'll go with TCS. It is the best stock out of these three. Thank you, Pavan. Please share your view on Web of Global. I'm holding it from a long time due to fundamentals almost now. So I don't know, unfortunately, about Web of Global. I have not studied the stock much, right? Okay. Thank you. Okay, I'm trying to answer as many. Okay, did I miss? Okay, what sectors India can we see in the uptrend once the Russia-Ukraine tussle is over? Okay, so guys, couple of things, right, regarding Russia-Ukraine crisis. Russia-Ukraine, now you might get surprised and I might get a lot of heat for saying this. This is not necessarily a Russia-Ukraine problem due to which the stock markets are falling. The Russia-Ukraine crisis is not creating any direct impact, so to say, or any major direct impact, so to say, on the US or on the Indian economy. It's a war, and the script of this war is very clear, and that is how any war is written, right? For example, the Western today, if you read the news, that China is going to use the global payment system of, sorry, Russia is going to use the global payment system used by China instead of using it from SWIFT. Everyone knew this. There is nothing new here. It is there, right? Everyone knows that sanctions are not going to work. Everyone knows that all these countries are going to announce sanctions, soft sanctions. They are de facto not even going to get implemented. So it's not a Russia-Ukraine problem at play. It's an inflation problem at play, for which the problems have been written. And why high inflation? Because of a wide variety of reasons. Again, because excess money printing. This all ties to 2020. When excess money was printed, everyone knew that high inflation is coming. Russia-Ukraine problem has just exacerbated or increased that inflation problem, and therefore you see a lot of FMCG companies also falling quite aggressively simply because of this issue, right? So that's a simple point. All the sectors that are falling down, for example, FMCG, AMC industries, banking, insurance, all these sectors are going to come up, right? Okay. Percentage allocation of CAMS, Amritanjan and Deepak Nitrite. So you should never allocate more than 5 to 7% in any stock. That is my personal advice, right? I personally follow that rule. So I will say that, right? But everyone would have their own logic here, because you can create a highly concentrated portfolio also, or you can create a diversified portfolio. You need to pick. For example, Mr. Warren Buffett has almost 40% of his portfolio comprises of Apple stock, right? Will I be comfortable doing it for myself? No. And would I advise you also to do it? No. But does that make Mr. Warren Buffett wrong? No, absolutely not. That is his style of investing. Having a highly concentrated portfolio works really, really well for him. But will it work well for me? No, right? And why is that? Simply because of the fact that Mr. Warren Buffett has a lot of access to like privileged information, which you and I'm not saying insider information, I'm saying privileged information, which he will get access to, which we do not. So we will panic if we have so much money stuck in one stock, right? Buying a put, which strike price is preferred? ATM. Okay, I will not answer this, Madhvan. I can answer it, but it will be a very haphazard answer, so I'll not be able to explain it, unfortunately. Okay, so data sale. See, whenever the industry expansion happens, steel price will go up. There is no problem around that. That will 100% happen, right? So sale is good from that particular perspective only. It's not as if that fundamentally it is a very sound stock. Okay. Clean Science and Tech, Godrej Properties. I will have to double check the price level of that once, right? Tata Motors, I'm very close to it. I feel that it is reaching a good level now, right? But not buying as of now. Right? Okay, so last giveaway winners I have already announced. You just need to send me on Twitter, right? Soumya Prasta, right? So please drop me a message on Twitter. My team will monitor, because I need your UPI ID to make the transfer, and I can't ask it publicly, right? So I have a portfolio with fundamentally very strong companies, but it's down by 13. Continue. Yes. So see, Rohit, that is the context with which I started the chat today. That if the Nifty itself has fallen by 15-16%, and if your portfolio is down by 13, it's not as if that you are sitting on a bad portfolio, right? It's completely okay for Nifty, for your portfolio to go down by 13 if Nifty itself has corrected by 15-16 from its top, right? It will come back up, right? So do you believe when the money printer stops, we will see a global depression? And do you believe that? Sidhu, basically, my point of view is that number one, will China take USA? Yes, it is already very much on the way. That will 100% happen. Yeah, that just will happen. There is no second guessing there. China will become a more powerful economy than the US. There are repercussions to that, but yeah, that is definitely happening. I don't think that the world can afford a major recession. Even if the recession happens, the recovery will happen very, very quickly, because we cannot have two massive back-to-back crises in a very short span of time. The world will just, we will, everything will get hit really badly, right? I mean, if such a situation persists, even like mid-sized good companies will go bankrupt. Money will not be safe anywhere, right? Forget just about stock markets. That will be a devastating situation. And in order to overcome that, this money printing game will continue, and that debt raising game will keep on continue up until what point? Up until the productivity catches up. And at some stage, productivity will catch up. Right? How will the increase in oil prices and rupee falling affect the economy in the long short term? So oil prices, basically, Pratik, what happens is that if the oil prices are going up, then India imports a lot of oil. So mehengai or inflation in India goes up. It also becomes a political issue, and like a lot of state elections, etc., are coming. So this becomes a major problem. A lot of small cap companies are not able to increase their prices, right? HUL can increase, right? I mean, you might have read the news also that HUL, Asian Paints, they have increased their product prices by up to 15-20%, right? Just a few months back. They will increase it again after 6 months. I can guarantee that, right? Why? Because the inflation is high and these companies have pricing power. But small companies go away, right? So be very, very particular about the small cap stocks that you are holding, especially around FMCG. If it does not have a brand, it's a problem. Now will come the discussion of Amritanjan, that hey, Amritanjan small cap, should I exit? No, right? I mean, that's my advice. Again, please don't take it as a recommendation per se. I'm just quoting an example to teach. So Amritanjan is a small cap, but does it have pricing power? It does. Why? Because it has a very strong brand value, right? How can you identify? Go and speak with people in South, or just in this chat itself, just drop a random question and see how many people know about Amritanjan. Almost all of us would have heard the name, and and these type of firms have pricing power, right? Okay, so I hope this is clear. Regular, thank you, Sid. Appreciate it. Views on latent view stock. Also, ONGC, should I sell it now as it is increasing or hold? So it's very hard for me to tell you, like, from a short-term perspective that, hey, should you be selling, should you not be selling? But from a long-term perspective, there is no point in holding stocks like ONGC, simply because they are highly cyclical. It really boils down to the price of the commodity, and commodity cycles no one can predict, right? People say that they can predict, but no, right? Because you neither can predict the supply or demand. So Dr. DP Singh says, how is Zain? Zain is very well, thank you. Would love to see him in your next video. Thank you. I'll definitely do a video with him. Yes. Okay. Pawan asks, how do value tech stocks prices like UiPath video on growth tech monopoly stocks to buy? Okay. So Pawan, basically, when you are trying to value like tech stocks, I don't think the valuation works, right? When we can't value it, because this is like a new age industry. In technical terms, the present value discounted cash flow models do not work out for tech stocks, because these are mostly story based. What happens in any tech company, be it Zomato, be it Swiggy, be it Zepto, be it UiPath, be it Amazon, for a very long period of time these companies stay muted, they do not make money, and then suddenly there is a point when the situation or the story flips, right? For example, if I'm not mistaken, if you just literally Google Amazon versus Walmart comparison, right, and you look at some charts, you will see that till 2016, 15, 16, something like that, both Walmart and Amazon were almost at the same podium. And then after 16, Amazon just grew exponentially and Walmart did not, and both are profitable companies. Why? Because tech companies grow that way. They are highly leveraged, so to say, not from a debt point of view, but from a story point of view. If the story plays out, then tech companies can make insane amount of money, and that is something that we can't value as investors. So the framework that I use in terms of investing in tech companies is very simple. That I just look at that. Hey, will this tech company is it likely to survive in the next 10 years? If it is, and if there is a very clear path to profitability, then that company is investable in my understanding. Right? Okay. Your view on Happiest Mind Technology and DMart. So DMart, I'm very positive, right? I mean, DMart is a good company. There is no problem, right? Happiest Mind, again, because it's a tech stock, tech stocks have been deeply overinflated for the last few days. And as I said on multiple of my videos that I do not invest in tech stocks, Indian tech stocks, and I've not invested even in one. But I will be taking more positions in Indian tech very, very soon. Happiest Mind is also fine. It's just the valuation that we just need to be a little bit careful, right? Because some companies, the valuations are extremely rich still. A classic case in point is Nika, right? Which I feel is a good company, but the valuation is just very, very high, right? So, yeah. So we just need to be careful about the valuation, right, of these tech stocks. Do you provide consultation? No, I don't, Rohit, unfortunately. If you have to enter in any one sector, what will be your pick? Should I go for FMCG, banks, insurance? I have an overall diversified portfolio. So, Srinath, you should be diversified, right? For example, if you have 100 new rupee to invest, you should invest across FMCG, banks also, insurance also, AMCs also. All are very good sectors. Don't invest in dying sectors, right? So dying sectors or untested sectors, like for example green energy. Okay, great. Green energy has been existing for, like, the story has been existing for the last at least 12 to 13 years, right? It is not profitable. No one has figured out profitability in that industry, right? So why go and invest in that? There are industry like AMCs where the profit margin is like 60-70%, right? So go invest there. It makes a lot of sense from that perspective. So yeah, so that's what I would say, right? And that stay diversified. Whatever new money you are putting, put it in a sensible format. Your view on Tata Motors. So Ramkumar, okay, so to tell you the story from my side, I'm going to either invest in Tata Motors or Maruti, and I'm very close to investing in it. I've been tracking both the stocks very, very closely. I'm slightly leaning towards Maruti, but please let me complete that analysis, and then I will put across a video also on the same. Yeah, so that's my viewpoint. I think a lot of EV play has already integrated in Tata. Maruti has delayed its EV play for a sensible reason, and I'm studying that reason more, right? And I will share it with all of you. Okay. Your views on Nazareth technology. Nazareth is a good stock, right? I'm like bullish about it. If like it is definitely like one of the top 5-7 tech companies, tech/gaming companies. If I have to invest in India, it will form in that. Tanla, I'm not sure. Right? Suzlon, guys, I'm just sorry about like Suzlon, etc. Right? I mean, I just don't know what to say, right? I mean, when people invest in Paytm, Suzlon, I'm lost for words, right? I mean, what see, this is what the problem is, right? I mean, if you have invested very little money in these stocks, it's fine because some of your stocks are not going to come up, and it's okay, right? It happens because you are taking certain bets, and some of the bets will go wrong. You just need to be correct maybe 40-50% of the time. 40% time, if you're correct, you will make insane amount of money in the stock market, right? So it's impossible to be correct about everything, but at least don't invest in like dying sectors. I can't say what to do with Suzlon. Just try to sell it whenever the markets recover somewhat slightly, because in a rising wave you will get the best price for Suzlon. Should we buy ETFs, exchange traded funds, in volatile market? See, ETFs are nothing but like a basket, right? So it has got nothing to do with volatile market per se, right? And honestly, just check the Nifty levels, right? I mean, if you are towards the bottom, right, bottom in the sense, see, no one can predict the bottom or the top of the Nifty, but you can definitely sense that, hey, you know what, 15,800, it's low, right? I mean, because the high has already been created at 18,600. So at this stage, 15,800, should you be buying or selling? The answer is you should be buying as much as possible, whatever you can, right? Okay. No questions. Thank you. Thank you, Avinash. Love from Canada. Love Canada. I also love Canada. I've not been to Canada for some reason. I would plan a trip there soon, right? So, yeah. But yeah, definitely like Canada is on the cards. Have Deepak Nitrite average price around 23. Should I stop loss or some? See, you should not be putting stop losses, Piyush, if you're investing. If you're trading, then put stop loss. If you believe in the Deepak Nitrite story, then you should stay invested in it, right? It's a good stock. It has given good run up. It's a good management. There are good things with that stock. Don't over invest in it, right? Wait for it, so to say. But you should not be selling good stocks because they are hitting stop loss, right? By that logic, now your entire portfolio should have been sold. So should have been sold, right, at this juncture, right? But if you sell everything because you have hit all the stop losses at 15,800, you know for a fact that you are making a mistake by exiting your portfolio at 15,800, right? Angad, I'm going to release him next month, right? The management consulting course. Deepak Nitrite entered. Should we sell? No. Deepak Nitrite is a good stock as per my understanding. Jubilant Food, it fell from. Okay. Is there anything fundamentally wrong? Akash, I have not studied the stock too much. I will study it. It's a very good stock. It was on my list. I was also an investor in it during like COVID times. Then I exited that at some stage. How companies benefit from their stock prices? Most of the stocks are only being traded and not bought directly from the company. So Ishank, if the stock is traded, then someone is holding, right? I mean, because company releases outstanding stock. So for example, if I own a company, I IPO it and I release 100 outstanding stocks. So I'm anyways getting money, right, on those stocks. Now, if people are trading my stocks more, then the price of my stock will move up and the market cap of my 100 stocks will also move up. So that is how it goes. Even whether people invest or whether people trade, it still benefits me as a company owner. Right? Should I have invested when I have loss of? I don't know what stock this is. Hostel Kitchen, right? Thoughts on Ashok Leyland? Would it fall in sunset sector? Tarun, actually, the problem with automotive industry is that because it is almost given that we will move towards EV, right? Almost every type of uh, every company will have to move at EV. It's just a matter of when, right? That's one. Second key point regarding move from conventional to EV is that it's not as if that by next year all the conventional automobiles will go away and EVs will come. Yes, right. That is not going to happen. What is going to happen is that there is a transition and a speed at which these EV transition is going to happen. So these two balancing game is happening, right? Because of which there is just like too much confusion in the automotive sector. So you should just hold, right? For example, if you take a look at something like Maruti, or if you take any automotive stock like Ashok Leyland, Mahindra and Mahindra, they are all trading at like all the stocks are trading at like 4 or 5 years ago prices, simply because of this fact that no one is assigning them a higher PE, because no one is believing in their story as of now, unless you tell that EV story very, very clearly and how you are going to win in that, right? So let's wait and watch. Let Maruti make some announcement or good companies make some announcement, then take like some positions in it, but don't get like super excited and invest your money right away uh, in this space, right? So views on InfoEdge. So InfoEdge is unfortunately a holding company. As per my understanding, it itself is not doing much, right? Uh, it has access to a lot of Naukri.com, for example, has access to a lot of resumes, etc. But what is it going to do with it, right? So yeah, so that's the I. It is just it has invested in a bunch of other companies that are giving them returns. So if you do not believe in the underlying assets, for example, I think InfoEdge has holding in something like Policy Bazaar. Right now, if you don't believe in Policy Bazaar, there is no point in believing in InfoEdge also. So that's how I would put it. I have Edelweiss and Arrow Green with huge amount invested. Okay. Okay, so see, Edelweiss is not a bad stock as far as I can tell you, right? What price you might have purchased it, I'm not sure. Why are you down by 50-70% over 3 years? Not sure. Arrow Green, I don't know, right? But Edelweiss is a decent stock. You can continue to hold it, especially when you're suffering through so much loss, right? Okay, Ashok Leyland, I have answered. Tarun, okay. Should we increase our SIPs on mutual fund during the dip? Yes, I would recommend that. See, the idea is fairly simple, right? I mean, for example, if you were investing when the market was at 18,600, would you get to buy more stuff, more units, or will you get to buy more stuff when the market is at 15,600, right? The market is existing at a discount. The market itself is telling you that, hey, I'm at a discount of 20%, buy me, right? And you're not buying it. You will buy it when the market is trading at a premium. So is it better? A parallel example will be that if you have to do your Diwali shopping, does it make sense to do it like 2-3 months before Diwali or on the Diwali day? You should do it 2-3 months before the Diwali, because you will get some better deals. But if you go on the Diwali day to buy something, you are going to get everything at an inflated price, right? So same is the logic here, that try to invest as much as possible right now, because the markets are trading low. While doing fundamental analysis, Bhavin asks on screener, if a company has a mixed compounded profit growth but has a great ROE and stock price CAGR, can we still consider it as a good company for long term? So Bhavin, you have not done the complete analysis. Basically, what you need to do is that, hey, is the industry growing or not? Not just the stock itself. Stock CAGR does not matter, because that growth has already been exhibited. What is more important is its sales slash profit growth, right? And how it is reinvesting its capital. So those metrics are much more important, and that is what you need to study from screener. Okay. Your views on alkyl amine, does chemical sector takes longer time to recover? Yes and no, right? So it depends on why the fall has happened, Sahil, as per my understanding. See, what has happened with chemical stock is that they got like super rich valuation in a very short span of time, right? I am lucky that I did not invest a lot of money right away, right when these were giving run up, right? I started investing when they started falling. So I am on a little bit of loss in these chemical stocks, but they will come back up, right? From that perspective, chemical industry or chemical sector is a booming sector. It's a sunrise sector, in my opinion, and you should. And alkyl amine is a very, very good stock from that perspective. There is absolutely nothing wrong with the stock. Okay. Okay, so have invested 50K in HUL, Ankit, Pidilite, TCS, HDFC, Asian, Polycab. It is a good return plan. I'm 30, minimum expected. So all your stocks are good, Ankit. Depends on at what level you have purchased. But if you stick with this portfolio, I don't think that you will suffer per se, right? And especially try to increase your holdings in almost all of these stocks, right? So that should be fine, right? So you will be getting them at a inexpensive price. Okay, please share your views with respect to Adani Power and Zen Technologies. So, see, guys, I mean, power companies, the problem is that we do not control anything in power companies. The government decides at what price you should be selling the electricity. We do not control the raw material price. We do not control what contracts the company is getting, or even the company does not control all of these. So we don't know, right? I mean, if political power change, then what will happen to Adani, right? So I'll not say anything more there. You guys are smart. So that's a simple point, right? So even if you feel that everything is great with a stock like Adani, can you hold it for 3-4 years? If the answer is no, then don't enter into it, right? Should we hold commodity stocks? Those are only one in green. See, they are green because of a cyclical issue. It's like saying that, hey, I should hold gold, right? And why am I even in the equity market? Because gold is giving return. It is giving you temporary returns. But if you watch it over a 10-year horizon, gold will give you really bad returns, right? So that is the unfortunate part. Okay. How important is portfolio allocation? Very, very important, Sanket. So basically, portfolio allocation advice that I'll give you is that please do not invest more than 5-7% of your capital in any stock. Okay. Plain and simple. No matter how much you mean. A lot of people are taking jibes at me that Akshat, you are like, overexposed to like HUL, this, that. No, I'm not, right? HUL is one of my favorite stocks. I have invested a lot of money in HUL, but have I invested more than 5% of my portfolio in HUL? The answer is no, right? And I've shown it also, right, from that perspective, right? 87 shares of DMart, it has gone down. Okay, what should I do? Subrata, the goal should not be to maximize profit from one single stock. Don't become like egoistic in the sense that, you know what, I'm losing money on XYZ stock and I need to make money from it. No, you don't need to. You just need to, whatever new money that you are putting, it needs to be allocated to the best possible stock given the market condition, right? So please keep that point in mind. I don't think there is anything fundamentally off at DMart. DMart is a good company. It is just that all retail slash FMCG is taking massive beating in the market. Therefore, DMart has come down, but it will rise up again, right? So it is expanding quite aggressively. It has a moat. It has physical stores. Not too many people or too many companies have run these type of businesses at scale at which DMart is doing. So the company is good. There is nothing off with it, right? Dawat, and I do not know this. Dawat, I'm studying actually, right? So I mean, let me come back to you on this via video itself. Okay. What about KPIT Technologies, which is quoted per se to be the next Tata Elxsi? I don't believe that, Abhishek. Actually, you know what? My hypothesis on tech stocks is very simple. That either it's going to be big companies that are going to win, Amazon, Google, etc., or super niche companies that are working on very specific problems. So these will be companies like UiPath solving RPA problem, or Plenty are solving like AI problem. So these type of companies. So I do not believe in this mix and match theory. And in India, unfortunately, technology companies are service oriented. So, and I don't see the service tech space growing too much, right? It can grow up to a certain point, but there are a lot of plug and play models that are being built, and the service play can suffer a lot, right? Dr. DP Singh, I invested 8 months ago, but I have started investing 8 months, but only bought small quantities at dip. So my portfolio has only fall off 8% in this crisis. Yes, very good. So that is good, right? And you should average more. You should be buying as much as you can, right, at this juncture, because we don't know. I mean, of course, it can go down further, right? No one knows. It can go to even like 5,000. Who knows? But bottom line is that the logic tells us that it should not be going down too much from this point, and you should be buying as much as possible when the markets are falling. Okay, to reframe, I meant asset allocation would make sense to move from crypto to equity. No. So, Sanket, I don't think so. See, consider your crypto investment as investment in tech stocks. So, for example, if you are investing in 4 or 5 sectors, then consider your TCS investment, or like, whatever tech investment you have made, equivalent to your crypto investment per se, right? So, yeah. So let me requalify that statement. Otherwise, it will come out slightly confusing. That whatever allocation you are doing to tech, consider crypto to be a part of that tech allocation. Okay. Please share your thoughts on Relaxo or a video. Relaxo is a very good stock. I'm buying it, right? So I see absolutely no problem with Relaxo per se. It's a sensible product. It's not as if that they are doing some funny stuff. It's a small cap company. It will grow with time. It will gain more and more market share. There is just no reason to panic. Okay. Have you? Yes, I have been to Kerala, right? I love it, right? I appreciate your consistency. Thank you, Ms. Maker. Astral, Deepak, DMart, Affle, HDFC, Tata Consumer, CAMS, Aarti Industries, thought on this portfolio. Okay. See, Astral is a very good company overall. Deepak Nitrite, I already spoke. DMart, I already spoke. Affle is a very good stock. I will make a separate video on that. Right. HDFC Life, I'm a big investor in HDFC Life. Tata Consumer is a good company. CAMS is a very good stock. I have already commented on it. Aarti Industries is also good. It is just that there is a lot of problem that is going on in /pharma/ industry in general right now, because of, again, that high cost of raw material, right? So that is the only issue that it is facing, and it has fallen a lot as of now. But overall, even if you consider this to be your core portfolio, it's not a bad portfolio from that perspective, right? Okay, all right. So folks, we'll end in like another 7 minutes, right? Okay, so okay, thoughts on Berger Paints. See, basically, Abhi, what I would say is that Berger Paint is good. There is nothing wrong with Berger Paint. It has slightly lower cloud compared to Asian Paints, right? Any top 2 to 3 players in a big growing industry, they will always do good, right? So even Berger Paints will do good from that perspective. But I would say that, when Asian Paints you're getting at a low price, right now, then why go with Berger Paints, right? So that's what I would say. Just curious how your investing game been before and after you became a YouTuber. Are you investing more now or being more cautious? So, Nikhil, I always used to invest. In fact, people do not know this, so I'll say it out. That YouTube only makes up like 10-15% of my time. My primary business has always been investing. So I invest even before on YouTube. I used to be an angel investor. I used to invest in companies. I used to invest in stocks a lot, right? Cryptos, right? YouTube just became a platform through which I started talking about my investments. That's it, right? So it was not as if that, hey, after coming on YouTube, I started making investments, right? Please detail videos on FNO. Okay, I will do that. I will do FNO video from a hedging perspective. Okay. Happiest Mind, what should be the recovery? See, if you are sitting on a 30% loss on Happiest Mind, it's not bad per se. It looks strange when I'm saying it, but honestly, 30% tech stock down is not a bad sign as of now. So please do not panic because of that, right? It's okay. In a day also, stocks recover quite aggressively, right? Tasty Bites, can we average it? Not sure, Shiva. I will not say anything. I do not know enough about it. I've studied the stock, but not sure. I can't recollect a lot of information right off the bat. Okay. JP Power, guys, I mean, JP Power gave like a return of 125, 130%. You should have booked a little bit of profit. I did the same, right? It's not as if that I sold the entire thing, but I did book a significant profit in it, right? At this juncture, see, JP Power should still go back to its previous high when the markets recover, right? Inherently, the stock itself has given returns, no doubt about that. It has hit a certain level. It was not pump and dump, nothing weird from that perspective. It's a good stock from that perspective, given the deep discount in the stock. Not a good stock from a fundamental point of view, but it's good because the valuations were very low. Okay, so it was a value buying opportunity. Still trading at high valuation shouldn't be a no. So see, Rohit, basically, if the company is making consistent profit and if that profit rate is growing, the rate of making that profit is growing, and even if you're purchasing it at a high price, you should not stress too much, right? That's what I would say, right? You will make money because the market will give you whenever the bull run in the market start, it will give you opportunity when again many of the stocks will become highly overvalued, and these are exactly the type of companies that will then again become overvalued. Okay. KPID, I'm more of a little risk-based investor and follow you two stocks from Midcap, of which you believe in. So I would say Relaxo is a very good small cap / mid cap, and Amritanjan is a very good small cap / mid cap, right? So these two, I would say. There are a lot more, but yeah, I mean, if you have to just go with two, these two companies are fine, right? So there is like no major problem there. Nazareth technology is good, right? Tanla, I don't know, right? I will study that and I will definitely say. What do you think about Ujjivan Financial Services or the holding company? There is no point in putting fresh money in Ujjivan. I am also stuck in it, unfortunately, at a loss when I made the video for Ujjivan. And guys, it's not as if that, I say that, what, I am making profits on every stock. I do not. No investor does, right? That's point A. As I said, that out of 10 bets that we will take, at least 3 or 4 will go wrong, right? You have to believe that is just the case for, and the same thing happened with Ujjivan, unfortunately, that there were management related crises, this, that, then the market itself went down, then Midcap started correcting this, and yeah, okay. So don't put fresh money in Ujjivan, right? But don't sell it also. It was making decent money. The capital lending space is growing, right? It's a good play, right? So it will come up, right, from that perspective. But don't invest money in these type of companies as of now, because you don't need to, because there are a lot of good companies that are there that will give you good return. So IDFC First Bank, I'm a big believer in IDFC First story. I think Mr. Vaidyanathan is doing like amazing work, right? So yeah, big believer. I think it can like become like a very strong bank going forward, right? So, AV Capital, why invest in it as of now? If you're already an investor, hold it, but don't take fresh positions in it. That's what I would say. Okay. Thank you. This I've answered. Okay, cool. Right. So folks, we'll just end it in a minute, right? So I will, okay. Amara Raja. Okay, see, Amara Raja, as I've explained like many a times, like on my videos, that see, the problem with Amara Raja is not that it's not a good company. It's a very good company, right? And it is like a leading when it comes to battery making. But the problem right now is the transition towards that EV, right? A lot of people, including me, right? And I'm like first one to accept mistakes when I make it, right? And very honestly with all of you, that when I started last year, when I spoke about Amara Raja, right? And I spoke about EV sector, not necessarily Amara Raja. The EV industry, I'm very bullish about it. But the pace at which the EV industry is growing, that is very slow, right? There are just too many challenges left. It looks to me like that solar industry wala game, right? That solar industry, everyone knows that, we should use solar. It is like more cost effective, this, that, but the pricing points have not come down, right? A lot of technical upliftment needs to be done. So that same slowness in terms of adoption is there even in EV as of now, right? In my opinion, and it might take a long time, right? I mean, so I know that people are betting on Tata Motors, etc., but this is the major problem that I see with OEMs, right? Any OEM, right, or any automobile company, so to say, right? So this is the major problem, because everyone knows that fundamentally the industry will shift, but the rate at which that growth is happening, especially in India, is really slow, and we don't know till what point people are going to hold their horses, right? So that's the problem here. Okay. Okay, so Realtel is a very good stock. I was actually just analyzing it. Most likely, my next video is going to be on this, right? So I will do a complete analysis. Your views, Lal Path Labs is a very good stock. Please do not worry about it. It is just that due to COVID, the pharma, anything related to pharma slash healthcare gained a lot of momentum. All these stocks became highly inflated. So it's a valuation problem. It's not a company problem. And as long as it's a valuation problem, it's fine. You will not lose money, right? It's fine. You will not make like insane amount of returns from Lal Path Labs, etc. But you will not lose money, right? So just stay put. Okay. What CDSL is a good time to pick some more now at 1325? CDSL right now, yes, you can pick it, right? Because as more people jump into the stock market, all these things will go up. There is no problem with CDSL, right? CDSL is very good. CAMS is also good. All these stocks are wonderful, right? Okay, so thank you so much, guys. We will end the session here, unfortunately, because it is like almost an hour, right? And people will be watching it, right? So thank you so much. Really appreciate you joining in. I will organize more such sessions, right? It's always fun to engage with all of you. Do take care, right? And please do not panic. That's the final message from my side. And yeah, and enjoy life. Don't get stressed by like 5, 10, 15, 20% loss. This, that. Losses happen, growth also happens, right? So that's how you should take it. We cannot be winning every single day, every single time, right? So take it like month by month. As long as you have conviction in whatever you are buying, you will do it. Okay. Thank you so much, and I will see you on the next live stream. Bye bye.